And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning and welcome to the show. It is, of course, Wednesday Hump Day. That also means Danny Ratliff joining me this morning to catch up on, things that are going on around the world and in the markets, etc. Some interesting topics this morning, though. We're going to talk a little bit about surprise fees, also one of the worst decisions, financial decisions that somebody made, and might surprise you about that. So we're going to get into that a little bit this morning. But outside of that, not a lot going on right now. Other than earnings, not a lot of economic data out on the front, kind of the front lines right now. This week, anyway, it's a pretty light week. Jobless claims tomorrow, of course. Consumer sentiment on Friday. But outside of that, not a lot going on. Now, the interesting thing about the economic data, though, is it's been disappointing estimates, right? So there's an index called the Citi Surprise Index, and this is the index that basically tracks whether or not the reports are surprising the analysts, in other words, coming in higher than what the analysts were expecting or not. And lately, it's been not. And that index is actually falling pretty sharply. Now, a couple of things about that. One, this kind of index moves back and forth pretty regularly because once analysts start getting, or these, I should say analysts because they're not, they're economists. Once these economists start getting disappointed, well, then they start lowering their expectations, right? So it's basically just a psychological loop. And so as the economists are getting disappointed and the index is declining and it gets down to pretty low levels, kind of where we are now, then it begins to surprise to the upside again because economists have lowered their estimates, right? So it's just this kind of psychological, badminton game back and forth. But the thing about that is that we're likely to start seeing economic surprises over the next few months. So that'll kind of help give some support for the markets. And these tend to run for about 3 months. So these cycles in the Citi Surprise Index runs about 3 months at a time, maybe 4, but generally they're pretty short cycles. So again, the market has been recovering since this kind of recent correction that we went through. And again, we talked about in February that we were expecting about a 5 to 10% correction. We got 5.5, so we were right in the ballpark. And so now we're kind of seeing that recovery. So supportive of that will not only be stock buybacks, but if we start seeing some better than expected economic data here in the short term that surprise. Now, again, doesn't mean that it's better. It just means it's the numbers exceed the economist expectations. That's all that means. So even though the number may be getting weaker, GDP is going to come in. I'm just picking a number, but say GDP comes in at 1.4 and was 1.6, but analysts were expecting 1.2. Well, that's a surprise, right? So it doesn't mean the data is actually getting stronger. It's just surprising the economists. But those surprises will give some support to the markets, right? So again, you got to play the game. That's all this is. Got to play the game with the market and the economy. So I had this conversation the other day. We can all debate about the economic data, whether CPI is real or not, or employment is real or not. It doesn't matter. It's what the market pays attention to. So always separate out kind of your personal biases versus what the data says and what the market actually pays attention to. But that Citi Surprise Index is now low enough, as I was saying, to start giving some support here to the markets. Combine that with buybacks, that buyback window is now back open. Of course, we've had just a surge in buyback announcements, well over $1 trillion of buybacks slated for this year. Of course, that will also help boost earnings as we get later into this year as well. Again, so we can beat those estimates. That's always the very important thing. We're pretty much wrapping up now with earnings season. So the vast majority of the S&P is reported. It's been okay. And as we talked about before, the earnings season kind of went by and large as expected. Again, no real big surprises. A few earnings missed here and there. Losers were, people that missed were certainly punished for that. Winners were moderately rewarded. But again, overall, pretty uneventful. Didn't really tell us a lot about where the market is. The one interesting side note of earnings season and what did come out of it is that profit margins are expanding, but only in the largest companies. So when you start taking a look at companies like Apple, Microsoft, et cetera, they're able to expand their profit margins. They've been able to increase that profit margin range. But once you start getting down into the lower 50, 60, 70% of the S&P, and particularly in small cap, mid cap space, very different story. That margin expansion certainly isn't nearly as strong as what we see in those kind of big mega cap stocks. So this has been a year where we saw two things really from this quarter, which was the earnings growth in general came from those top big mega cap companies. Strip those guys out, companies really didn't grow earnings much at all this quarter, and profit margin expansion primarily came from that same group of stocks, not those mid, small, and kind of the lower tier of the S&P 500, not really contributing a lot there. And they're more representative of actually what's happening in the economy. And again, not surprising. We're seeing excess savings of consumers beginning to run out now. We're starting to see slowdown in credit demand. So you're starting to see that impact of higher rates, this kind of lag effect now starting to catch up. And you are seeing it in the earnings growth and profit margins for those non-mega cap companies as well. Just something to pay attention to and see if it starts to spread kind of up the ladder into some of those bigger companies. Okay, here's what you need to know before the bell this morning. So yesterday the market eked out another very small gain, but again, we were actually up more in the morning, sold off, went to about break even for the day, and then rallied just a little bit to the end of the day. But nonetheless, we've had 4 straight days of advances. So again, this has been much of a relief for the markets. That buy signal very firmly in place here. Futures are kind of flattish this morning, down a little bit. So again, we need a little bit of a pullback here. Markets are getting just a tad on the overbought side, but not a lot. But what would be really helpful for the markets is a bit of a pullback here to the 50-day moving average, hold that support, maybe base there for a day or two, and then have another rally, and then take out this high from yesterday, and that would certainly continue this bullish trend higher. But again, we've kind of moved fairly quickly coming off this correction. There's a lot of buying on deck between buybacks, which are now coming back here, but also if you take a look at the CTAs, so these computerized trading algorithms, they've got a lot of money to buy here, about $80 billion worth of equities that they need to buy. Also, everybody that was shorting the market back over here, expecting a much bigger decline, now has to cover. So you've got a lot of potential buying here over the next month or so. So again, the bias is going to be the upside. Not going to go directly there. As we were talking about here during this decline, we said, hey, use this opportunistically to add to exposures that you want, to the stocks you've been wanting to buy that have had a big sell-off. Great time to buy those. We were doing some of that during this process. Now you're going to start getting rewarded for that. But again, continue to use little dips here along the way. The market's not going to go straight up. We're going to, kind of stair step its way up. So use pullbacks to add to exposures as you need to get your portfolio rebalanced the way you need it. But again, really nothing overall on the overall market exciting, not really happening. It's just been a very nice kind of rally off that support, nice rising bottoms. On the Treasury side, yields have been falling very nicely here. Again, we've taken out the 20-day moving average, came down yesterday, tested the 50-day on the 10-year Treasury as well. So this is interest rates. This is the inverse of bond prices. So bond prices going up. We've got a sell signal on interest rates now, which suggests lower rates here, at least in the near term. So we could see interest rates come back to about 4.2% theoretically as we kind of go forward into the summer. But just again, this is all going to be predicated pretty much on the view of what the Fed's going to do next, which is they're expected now to cut rates. That's what you need to know before the bell this morning. Okay, come back, pick up with Danny Ratliff right after the break. Lots of stuff to get into. Hang around. More of the Real Investment Show coming right up.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
So you're ready to retire, but are you ready to transition to Medicare? Knowing how health insurance works after you leave your job is vital. Our next Lunch and Learn will tackle transitioning to Medicare, Wednesday, May 15th, with Danny Ratliff and Richard Rosso. How do you sign up for Medicare? And how will it work with the insurance you already have? Food for thought and food for your belly. Register now for our Transitioning to Medicare Lunch and Learn with Ratliff and Rosso at realinvestmentadvice.com. Realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So, a couple of years ago, by the way, good morning, Danny.
Hey, morning.
How are you?
Great.
Good. So a couple of years ago, I guess actually it's more than a couple now because, time flies. I was watching a movie last night with my wife, and it was like, man, this is an old movie. 2009, all right? You're watching movies with these actors. So we're watching this new series with Jeff Daniels on Netflix called A Man in Full. And he's 69. And yeah, exactly. And exactly right. I mean, and you're looking at all these actors, there's Lucy Liu is in it, Diane Lane, and, Jeff Daniels. And, these are people we grew up with, and just now they're all old. It just makes you realize how old you're getting.
Do you realize that the last episode of Friends aired 20 years ago?
I know. Exactly. So anyway, just getting old. But anyway, so time flies as you get older too, because you're just glad you wake up every morning. But a few years ago, we started talking about the unbundling of things, right? And it started with the cutting of the cable, and we're going to cut cable, and this is going to be great because we're going to get rid of this monopoly of cable companies on entertainment, and everybody's going to be able to just subscribe to whatever service they want. And it all sounded great at the beginning, right? And now everybody's figuring out that they're getting feed to death. So, I mean, it's like there's a fee for this, there's a fee for that, whatever you want to do. And now printed media has jumped on this. Now everybody's got a Substack, everybody's got a paywall service, etc. So you're just paying fees everywhere. And then what we're finding out is that now there's fees on top of fees. Not only are you paying for the service, there's all these other fees that are buried in there. Like, take a look at if you want to scare yourself, take a look at your cell phone bill sometime about what you actually pay for your service and the difference in the bill and all those different fees that are in there for using their service. But anyway, it's an interesting article in the Wall Street Journal kind of talking about this today. Surprise fees are widely hated. They're not really surprises until you actually look at the bill, right? That's the thing. But they're still sneaking onto the bottom line of bills for everything from concert tickets to dinners out. Danny, you've got some recent experience with concert tickets.
Yeah, I do. And this is something that I think
he was buying tickets to go see that the boy bands.
The boy bands, yeah.
Backstreet Boys.
Exactly. What he's not telling you is I was buying them for Lance.
Exactly.
But so... No, this is one of the
Bieber.
things I think we struggle with within financial planning and budgeting in general. And I know that budgeting word's a 4-letter word for many and they don't want to think about it. But with the accessibility and the ease of purchasing things, I think we've forgotten ways to get around some of this stuff.
Yeah.
And that's a struggle because it is so much easier. And you think about, okay, what's my time worth? How much, how long is it going to take me to go actually do things a little bit differently? And I can remember my father growing up if we go out to eat, he did not like to eat at restaurants you had to tip. Okay. He didn't. He's like, what's ridiculous? He's like, most of these places don't even do anything. You may go order at the counter, you pick something up. Why am I tipping? And I've gone to some restaurants here recently where I'm going to pick something up. They don't even allow you not to tip. I'm like, let's take that off.
Right.
I don't mind tipping for good service, and don't. And
I'm scared not to tip because I'm afraid they're like spit my food.
No. I'm a generous tipper when it's at the right time. But I'm with you, Lance. So
I didn't tip once, and my pizza came like slammed
upside
to the
down.
bottom. Exactly. So.
Rule of thumb: if you have to stand up to order your food, you don't have to tip.
Yeah. Well. Yeah. And again, I'm not eating out with you.
But it's gotten to the point now where it's just it's a little too much.
It is.
And so you're going back to concert tickets. My wife and some friends were going to go to a concert. I was looking online. I was like,
Justin Bieber.
$35 a ticket. Clearly not Justin Bieber. Said my wife and her friends. So $35, but then I go to check out. It's $50 a ticket. I was like, wait a second.
Yeah.
So you do the math. That's 42% of that $35 fee and $15, right?
Right.
That's exorbitant. Like, there's a problem with that. So you're like, okay, how can I get around this? Well, small venue. You can go to a will call, purchase the ticket there. But will call's not open until night. This is a place not close where I could get there. But there are ways around this in some instances. So there's a struggle, I think, that trying to get around. So there's actually some bills passed over the last couple of years that are supposed to mitigate some of this exorbitant additional fees. Unfortunately, we just haven't seen that come to pass.
Right.
And it's not just in that. You hear about this, and people, the article highlighted a handful of things that, I've talked to my wife about it, and she's seen too, but like going to get your hair cut, and they're going to shampoo their hair with women, right?
Right.
I don't have to worry about that. Cut my own hair, barely got me. And they're charging them per squirt of shampoo.
Really?
Yeah, which is crazy. So, yep, you got a little more hair. You're going to need two.
Yeah.
Brett and I don't have to worry about that.
But no, I mean, but it is true though. I mean, it's whether it's your Uber driver, whether it's your DoorDash delivery service, it's taxes, it's fees, it's delivery, it's this fee, that fee. And again, that's what I was talking about is that, people are just getting feed to death. And this is part of the inflate, we talk about, oh my gosh, prices are higher. A lot of the cost in these higher prices that we're seeing is all these additional fees that are getting buried into things. And I'm not sure that's how you fix that, because either there's going to be a revolt, right? And people will, stop buying things because of the fees, and that'll bring some of these fees down. Or it will normalize, and people are just like, well, that's the way it is, and they'll get used to it.
I think it's normalized.
Right.
In a lot of ways, because I think that there's a lot of businesses that will not allow you to do business with them unless you actually go this route. Everybody's trying to go cashless.
Right.
And they're trying to get, we'll go through my app and you can get this. Well, the problem is that's where all those additional fees start ringing up, because there's a cost of doing business in that manner as well. Now it's cheaper for the business likely than having somebody behind a phone or somebody actually at a counter, but it is becoming more expensive for us in a lot of ways, which is unfortunate.
Yeah.
And that's going to be the struggle, I think, moving forward is, you talked about unbundling. How do you unbundle, but how do you unbundle from this? And it's going to be people are going to have to get fed up, and they just can't afford it.
Right. Well, no, it is an issue. And again, it's in everything you look at. Look at your cable bill, phone bill, and every time you turn around, there's a new fee in there somewhere for whatever it is, right? Some transmission fee or convenience
fee. Or it's the fee that they have to encounter to actually do business for you to do business with them, which should have been, I'd feel better about it if it was just lumped into one fee.
Yeah. Just charge me $50 for a ticket. Let's call it a day.
Yeah.
Right. Because I'm bet. And again, this is part of the issue. Really, it's that shock factor, right? Oh, look, these tickets are only $35 for Justin Bieber. That's great. And then you get a bill for $50. So now you're upset. If they would have just charged you $50 up front, you'd be fine.
That's right.
Right. They'd be like, okay, it was $50. Okay, I'm good with that. There it is, paid. But then just include all the fees in the price.
Yeah, and that's the unfortunate part. I think that many people, you do get caught, or you just don't look, right?
Yeah.
I mean, I've had times when I've looked at something and you're like, all right, Apple Pay, boom, it's easy. And you're like, oh, shoot.
But, well, this goes back to what we talked about before, is that this also feeds into that kind of that leakage into the budgets. You talked about the budget process being a 4-letter word. Nobody wants to budget. But that's the one thing that does, creep up on my kids in particular. When I talk to them about their money, it's like, man, I just, I don't know where the money goes. And I'm like, well, let's go kind of take a look at what you've been spending. And again, it's, $5 here, it's $10 there, but it's these extra fees that get embedded into your normal bills that you get these. You'll get a notice in your email that says, oh, we're adding an extra fee to your Verizon bill for this, and you just kind of pass it off, right? But you look back and you just kind of see this creep in prices of everything you're paying for, and it's this leakage that happens in your budget, and all of a sudden it kind of catches up with you. And this is one of the problems from the budget side, is just trying to control that leakage. It's easy to get caught in that trap because, again, if you're paying money out, and this is one thing I do agree with Dave Ramsey. He talks about the envelope system, which is take all your monthly payments and things you're going to do, entertainment, eating out, et cetera, and put cash in an envelope. And then when you spend that cash, you're done for the month, right? And I like that idea. It's tough to do these days. It's very tough to do. But if you can do it, you will realize how much money you kind of waste, because it's so easy to whip out a debit card and just pay for something. But if you've got to pay cash and you're actually pulling that $20 bill out of your wallet or $40, whatever it is, it's a very different experience buying stuff. And a lot of things that you will just normally just swipe a card for, you'll think twice about if you're paying cash.
Yeah, there's something about having that tangible funds in your hand, right? Where, oh, shoot, okay, well, went over, can't spend it. Where that credit card, we feel a little bit more prone to say, yeah, you know what, it's okay. I'm just going to do a little bit here, a little bit there.
Yeah, I'll trim out, I'll catch it up somewhere else, right?
It's the snowball effect. It's the problem, is that it begins, and once we usually do a little bit of it, we usually do a lot more, is what we find. That, it's easier to, if you bend the rules a little bit, you're more likely than not to bend the rules a lot when it comes to your finances over time. It's funny, so on the YouTube chat talking about things made in China.
Right.
And there's ways that you can actually purchase online now, things that are made in America. There's a place called Mammoth Nation. If you guys haven't seen that, obviously not sponsored by them or promoting, but
if you want to, Mammoth Nation,
we're here. No, but there are ways, and it is difficult because, somebody mentioned that going on Amazon, they don't want to purchase things out of state. And it's so difficult to know where things are made. But I think that's the case with a lot of companies in general. Even I've found that companies that sometimes say made in America, well, they may have parts that were made in America, but it's assembled overseas.
Right. Well,
vice versa.
This is the one interesting thing about TikTok, right? So we're dealing with this whole TikTok ban potential thing. But there's been about 6 million businesses created on TikTok of people that are crafty, just say, and they make art or they do woodworking, whatever it is. A company called James and James, they make handmade furniture and they sell it through their TikTok account, but they're all made here in the USA. So there's a lot of people that are making products right here in the US and they're advertising on social media channels. And we don't think about it that much, but there's a lot of activity that happens domestically that you can take advantage of if you like that. So, all right, quick break. We're going to come back and talk about the worst financial decision that somebody made. It's kind of an interesting topic because, again, I think a lot of people are challenged with this particular issue with today's cost. Be right back.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
So you're ready to retire, but are you ready to transition to Medicare? Knowing how health insurance works after you leave your job is vital. Our next Lunch and Learn will tackle transitioning to Medicare. Wednesday, May 15th, with Danny Ratliff and Richard Rosso. How do you sign up for Medicare? And how will it work with the insurance you already have? Food for thought and food for your belly. Register now for our Transitioning to Medicare Lunch and Learn with Ratliff and Rosso at realinvestmentadvice.com. Realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Gen Zs are now rediscovering old stuff.
Yeah.
Camcorders and flip phones. See, I think Apple's missing it. They need to come out with a flip phone.
That would be brilliant.
Yeah, when you flip open the phone, it plays 90s music. They're rediscovering 90s music.
The Real Investment Show podcast. Same show, your schedule.
They're not discovering good music, right? They need to go back 10 more years, get to the 80s.
At realinvestmentadvice.com.
Get to some good music.
70s.
No, not the 70s, Brent. 80s.
I'm with you, Brent.
60s.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, plus each day's radio shows. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So just watching a commercial on CNBC during the break, and they're talking about how they're starting to use AI to improve your golf game. So I figure at some point they're just going to, integrate AI into a robot that'll shoot 18, and pretty much that's done. And then the question is, will they allow robots to compete in the LPGA? So I don't know where this goes.
Yeah, I'm going to keep my mouth shut.
I mean, I can't play golf, so it's irrelevant to me. But I just figure the way things are going, it's just AI is going to take over everything at some point, which is why we keep buying more stocks related to AI.
That's pretty boring, though, right? I mean, I think people go out there to get away, to do things, and not to, I don't need a robot doing something.
Yeah, but
I mean, granted, it'll probably be much better, but
it'll be like, I don't know. Anyway, but we'll get there. I'm very curious as to what it's going to look like in 10 years, because we're making such rapid advances in AI.
Yep.
And it's starting to integrate into everything from medical to sports now, using AI for analytics to improve outcomes, etc. And if you've watched any of the videos of like Boston Dynamics and some of the companies that are building robots, even Elon Musk, some of his robots that they're working with, as soon as they can integrate AI into these robots, it's going to be Will Smith, right? iRobot. It's
interesting times.
And then we get Terminator, and then we go from there. So
Robocop.
Exactly. That'll come first. Robocop and then Skynet. So interesting story in Market Watch today. This is something that we've talked about before here on the show. And this is a challenge that a lot of families come up on. And, there's an interesting debate that's going on currently in the country about the inequality of pay between men and women. And what's interesting is that you've got to be real careful with the data because you have to compare pay between male and female in the exact same job, right? You can't just take a group of women, a large group of women and a large sample of men and say, well, the men made more than the women and say that's pay inequality, because that's not a fair statement, because women aren't working on offshore oil rigs in the middle of the North Sea doing underwater welding. Yeah, those guys make $300,000-$400,000 a year or more. They make a lot. Women don't do that job because the life expectancy of that job is about 3 years. So it's a very, very dangerous job. And so you can't just lump people together and say, oh, there's pay inequality. And this is what a lot of these headlines talk about. And you also have to strip out the difference between couples that make a family decision for the wife to stay at home to take care of the family, or maybe she works a part-time job, whatever it is, to help support the family, but mostly staying at home. So again, you've got to strip this data down and say, I want to compare two lawyers, right? Two corporate attorneys in the same, in the same job, in the same role, at the same level. Is there pay disparity? Right? That's how you have to do this analysis. And what you find out is when you do that, there's really not much of a pay gap. But it is interesting because when we talk about this, this comes down to inflation, comes down to trying to make ends meet. And one of the decisions that is often put out there, and going back to Dave Ramsey, I've heard him talk about this before too, is like, well, if your wife is working and you're paying for healthcare or paying for childcare, somebody just needs to stay home, right? Take care of the kids. And there's a really interesting article in Market Watch today, end of April, talking about balancing that equation of staying, the wife staying at home, or the husband. I mean, it can be either one, right, these days. But somebody staying at home to raise the kids, and the other one going to work. And it was interesting because in this particular article, this couple is barely in their 30s, and basically they made this decision for the wife to stay at home to take care of kids. Turned out to be the worst financial decision they made.
Well, I've seen both. I've seen where it works really, really well, and I've seen that there's struggles. And I have actual experience with this. My wife stopped working when after we had our third kid.
Right.
And, it's a challenge. It's a big adjustment to living off of one income. Now, it depends on how you're doing things prior to this. And I think you need to kind of set yourself up in many ways to say, okay, how can we do so efficiently, effectively, and without disrupting the household? Mm-hmm. And, many people, I feel like it's just kind of those decisions where it's like, oh, that's it, we're done. When I'm frustrated at work, you say, we'll figure it out as we go. But if you can plan for this and live off of one paycheck for a while, I don't think you would have this experience.
Well, there was two byproducts of this, and yes, you're talking about the financial aspect one, right? But there was another aspect to that, which was that it was a very bad decision for his wife because it hurt her financial prospects in the future, and that's been something we have talked about before. Is that, and it's the same way for the fire. Remember that whole fire movement we had a few years back, where people were financially independent, retire early, and they saved up $300,000, and they bought a van and lived down by the river, and they were going to retire at their 30s. And that's all fine and dandy until you decide at some point that you've had enough of living out of a van and you want to go get a job and go back to work. The problem is you've lost your skill gap. There's this massive skill gap that develops, and in today's society in particular, things are moving so quickly in terms of a dynamic market, the introduction of AI and everything else that's going on now. If you step out of the workplace for 10 years, 15 years, and then you try to come back to work, you've got this massive skill gap. Versus as compared to what you can do versus what employers are looking for.
Yeah, no, I agree. I think that it's not necessarily the skill gap too, but it's just what's on your resume, right? You've been at home for so long. But I think what this article in particular is talking about, Lance, is the financial stress, the stress that it puts on one spouse. There's stories of people working two jobs to try to make this work, underestimated the cost of a child, which, yes, they are expensive. But you should be able to alleviate some of that cost with a spouse staying home. And so, I think some of the things leading up to this, you need to say, okay, if we can truly do this, we need to set aside these funds and live on one paycheck right now. Because number one, you need to have that additional buffer in the event something goes wrong and you need funds. But number two, you need to go ahead and create that lifestyle, not say, we'll get there when we get there. Because that never happens.
Right.
Because then they're staying home, they pick up other hobbies, pick up things that they want to do. You realize that, oh, I'm not spending money here, but now I'm spending money over here. And I think this is what's difficult. The pay gap aspect, or maybe that lack of experience, I think that's a challenge. But what I'm seeing, because we're kind of in that, right? I'm in my 40s. We see a lot of couples where one spouse has stayed home, and then they inevitably go back to work once the kids are in school or they get a little bit older. But I'm seeing more and more entrepreneurs, people saying, you know what, I'm not going to go back to corporate America. I do have that gap here, maybe overqualified in some areas for what they feel like that they're being offered. It's like, you know what, I'll go start my own deal. And a lot of them have been very successful. But I mean, it's funny, we talk about this. I was talking to my neighbor yesterday. We've had, in Houston, there's been lots of flooding. We've had tornadoes, trees down, had a bunch of trees down. And we were talking about, I had somebody come cut some up and take them off. And we're just talking about services in general.
Right.
If you could do something halfway decent and communicate, you could make a ton of money.
Right.
I mean, the problem is you could call 15 people, you may hear back from 3.
Yeah. No, it's very true. That's one of the biggest challenges that my wife and I face is, trying to find somebody that can communicate well.
Yep.
Communicate regularly, right? Be on top of the job. But, the one thing I hate more than anything else is trying to chase somebody down to get them to do something. Right.
I agree.
And again, if you have an ability to communicate well, you can show up on time, do the job well, charge a fair fee, right? I'll even pay you more if you do a great job. If you're a little bit more expensive, but you do a great job and you communicate well, I don't have any problem with that. The problem is you just don't really find that a lot. And it's tough. But it is, this other aspect in here that was brought up in this article several times was about the rising cost of childcare. And this was one of the decisions behind the wife staying at home. And, I think it was the Brookings Institution, just a second.
Brookings Institution from 2022 said that parents with 2 children and 2 parents will spend about $310,000 between the day their baby is born and the time they're 18. And that is excluding college education.
Right. So what's interesting about that, and we talked about this as well, one of the side effects of the 2020 pandemic bailouts was that we started sending money to households for childcare, and we increased the childcare tax credit and all this. And it's like, we're going to lift all these people out of poverty by giving them these child tax credits. Well, as we said, and we said this then, and I actually wrote an article on this. It's on our website to talk about this just for reference, is that's fine. If you want to send more money to households for childcare, that's awesome. The problem with that, though, is that every childcare provider is going to do what if they know you have more money for childcare? They're going to raise their costs.
Correct.
So we saw a massive spike in childcare costs because of the government sending money to households and giving them tax credits for childcare. That's why you have inflation. Right? Inflation comes from government spending. And so when you have government spending and you're giving money to households to spend, everybody else that supplies those products, goods, or services are going to raise their costs because they know you have more money. So, this is the short-sightedness of what we have in a lot of these things that we want to do. We think they're benefits, but once the money runs out, the cost doesn't change because now the childcare providers say, we've been charging $3,000 a month or whatever it is. That's our price. And so you've either got to pay it or not. And the problem is the money from the government is no longer there. So
always a struggle.
Yeah. Decisions of bad policymaking as well.
At government and at home.
Yeah. All right, we'll come back. We're going to wrap up the show with Danny Ratliff. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
So you're ready to retire, but are you ready to transition to Medicare? Knowing how health insurance works after you leave your job is vital. Our next Lunch and Learn will tackle transitioning to Medicare, Wednesday, May 15th, with Danny Ratliff and Richard Rosso. How do you sign up for Medicare? And how will it work with the insurance you already have? Food for thought and food for your belly. Register now for our Transitioning to Medicare Lunch and Learn with Ratliff and Rosso at realinvestmentadvice.com. realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So, Larry, you need to email Brent your mailing address, and we'll email you a candid coffee mug for his comment of the day on his retirement plan, which is, my retirement plan is to start collecting Social Security at the age of 62. My wife will work until she's 70. He's going to stay at home and keep buying her donuts, so he'll get the survivor benefits. But Danny may argue with you about taking them at 62. He may want you to wait till 67, but I like the plan. Feed her donuts.
Oh my goodness, the things you guys come up with.
So this morning, my daughter gets up very early. By the way, I told you the story here recently that she was trying out for colonel of the Cinco Ranch High School dance squad, and she got the position. So she tried out, competed against all the other people. She won. So she's now colonel of Cinco Ranch. So that means she has to get up at 4:30 in the morning with me now to get prepped for the day, get there, do everything she needs to do to be colonel. So, with leadership becomes responsibility. She's now learning this idea. But every morning she's junior, be senior next year. And so we're going through this whole debate right now about college and, where to go to college and what type of degree to get. And she's trying to go through, say, what she wants to do in life. And so I'm constantly sending her text messages with article links about, career choices. And, she's very smart. She's very independent. And, she wants to do something she enjoys in life, but she wants to make money at the same time. So, that's a tough challenge today, right? Because a lot of the things that you would think are, I want to do this because it's fun, is great, but doesn't necessarily pay a lot, right? And so the problem is you need to have a job that is in demand by companies and that they're willing to pay you for, right? So it's just kind of, but anyway, there was an interesting article on Yahoo Finance. And I sent her the link to this article this morning at 4:30, so I haven't had a chance to see if she's texted me back yet, but she usually has some smart-ass comment that she sends me back, but she's very snarky. But top 5, so the article is about the 5 jobs with the most millionaires in the country. And so this was a survey that was out. They quizzed 10,000 millionaires across the U.S. to find out what they do for work, and how they built their wealth. The top 5 careers for millionaires turned out to be engineer, accountant, teacher, which I thought was interesting because, we hear about the teacher salaries and those type of things. And I'm presuming that when they talk about teacher, we're now talking about, because it doesn't break it down. I'm sure we're not talking about, second grade elementary teacher. We're probably talking about a college professor at some point, right? Management and attorney. Those were the top 5 career choices, which I thought was interesting. And surprisingly, medical doctors and physicians didn't make the top 5. But that's because, Danny, you know this, and then probably as well as anybody else, physicians and doctors are the worst with money. They make great money. They're terrible at managing it.
No, and I think that's right because everybody's they're putting more and more funds in different places, and lifestyle creep happens easily amongst that group for whatever reason. But what I thought was interesting about the article in general was what they mentioned was, and if you think about these careers, so engineer,
right,
accountant, teacher, management, and attorney, all very process oriented. And so I think what they found is, those things that we always talk about of paying yourself first, living within your means, all those things are probably much easier because it's just a process. If you set it up and you continuously do so and you manage the process over time, okay, hey, you got a pay raise. Let's up what we're putting aside. Let's do these things that are beneficial to our financial wealth. I think it makes sense.
Right, it does.
Now, there's a lot of people who probably make a lot more money, but
like doctors.
Yeah, well, my dad always says, he goes, hey, it's not about how much money you make, it's about how much money you save.
Right.
And there's so much truth to that because I know a lot of people who've done extremely well who've never made a lot of money.
Yep.
Like I'm talking about never made a lot of money.
Yeah. But it's a function of living on less than you make, saving, investing regularly, that type of thing. And this is something that, I get a lot of emails from young people, right? In their mid-20s, no kids, maybe one child, maybe married, maybe not. And, trying to, like, I want to build wealth, I want to retire someday, et cetera. And, the rules are pretty simple, right? It's not real hard. It's just you've got to save money and, invest it in your 401k, invest it in a Roth IRA, invest into an S&P index fund and just do it consistently and live below your means and save money. And if you do that, I mean, you almost can't help but build wealth if you're just saving money. And, you can even save your way to being a pretty decent, financially well-off person just putting money into a money market account because you're saving money, right? You don't get the growth aspect necessarily, but if you're saving money, if you can save up $100,000 or $200,000 just in cash, you're better off than about 80% of the people in the U.S. because
way better off.
Yeah, I mean, it doesn't take a lot to set yourself up financially, and if you can just add to that a little bit of a standardized investment program, you're going to be light years ahead of the vast majority of people. I mean, it's still kind of dumbfounding to me that when you start talking about the top 2% of the population in terms of wealth, it's $2 million.
Yeah.
It's not a lot. And that puts you in the top 2% of people with money. And so again, it doesn't take a lot to really move yourself up that bracket.
I mean, it is a lot.
It is. It is. But I mean, you just think when we think about
correct.
Jeff Bezos and these guys with billions and billions of dollars, you're like, well, that's the top 2%. It's those people.
No, that's the top 0.00001.
Exactly. Yeah, that's the thing we lose sight of.
Well, and I think it's easy to lose sight of because that's all we see. When it's all over the media, anything that we see, that's what's out there. And what's interesting, this article, they didn't talk about who made the most money. They talked about who actually was able to accumulate the wealth. And you're right, human capital, I think we discount that so much. And the media also does a really poor job. Well, they're trying to sell us stuff, right? Yep. So, here's our next get rich quick scheme, right? Now you have it on, you mentioned TikTok, all these different outlets, all these people, hey, call me, look at my car that I rented for the last hour. You could do this too.
Yeah.
And so we get swept up in things and we forget that the simple processes, the things that actually make wealth are you. And now granted the market, I mean, it may sound counterintuitive to what we do. Yes, the market will do you well over time, but we also have to be careful with what we hear. Right. I mean, somebody mentioned in the YouTube chat a bit ago that somebody, won't mention names, was saying, look, invest in this mutual fund. It's so easy. You're going to make 10% every single year and compound.
Oh, it came down. It used to be 12.
I know, right? But that's not the way money actually works, right? Unless it's guaranteed. We talked about the Rule of 72 in the past, how some people say, well, hey, we've worked together for this long and I've had X amount of return. It's been 8% or 7%. And, shouldn't my money have doubled by now? And then we kind of go through, well, no, that's only if you have a fixed rate of return that would require that compounding where we may have a year where you're up 20 and a year you're down 10. That makes it tough.
Yeah.
And so it's a little bit different. So don't discount that. And I do see, we've talking about people who accumulating money. We also talked to a lot of people who get towards the finish line, and now all of a sudden they say, we've got to get super aggressive. But they don't get super aggressive with saving. They get more aggressive in the market.
Right.
And that can be problematic too.
Exactly. Well, and one of the things they didn't talk about, and then when you look at engineer, accountant, management, business management, an attorney, what they didn't really separate out is that those four fields in particular, a lot of those generate businesses. In other words, a guy that's an engineer goes out, starts his own engineering firm. A guy that's an attorney sets out and forms his own law firm, goes into private practice. A guy that's in management starts a business doing whatever, right? Selling a product, good, or service. Accountants set up their own CPA firms. And again, one of and one thing I tell my children a lot is when I talk to them is saying, look, if you really want to build wealth, the way to build wealth is to start a business, because ultimately that business builds value. And if you take a look at a lot of the people that have made wealth in the country, they're all business owners. They started a business, they grew the business, they sold the business at some point, and that's where a big chunk of their wealth came from. Yes, you can build wealth. You can build several $1 million worth of wealth just working for somebody else and saving and investing. But if you really want to build wealth, and again, what those 4 degrees tend to lean towards in particular is starting a business that also builds value, because the business has value because of its revenues and those type of things that eventually you can capitalize on by selling that business or monetizing it in some manner.
Yeah, I can absolutely attest to that. Years ago, I was thinking back, I was like, okay, what does my career path look like, right?
Yep.
You can work at a big firm, you can do very well, make a lot of money, but you're never going to have equity, and you're always going to be working for somebody else. And so the thought was, well, what if you do this on your own? How does that look? Or not even what I'm doing here now, but just anything in general. But what I noticed is that there's very few people that build generational wealth working for a large corporation, right? Yeah. And everybody says, oh, well, you could get up and you could be the CEO, you could be this. Well, that's what everybody in that corporation aspires to do.
Right.
And you can build great wealth. But when we see, generational wealth, more often than not, it's somebody's created a business and they've had a liquidity event, they've had something that allows them to continue that growth and build their wealth over time. But yeah, I always find that interesting.
Yeah.
And not to say there's not those guys out there that aren't, C-suite execs making a ton of money or even under that.
But that's like the NFL, right? NFL players make a ton of money, but that's the top 1% of all football players, right? So if you get into the C-suite, you're in the top 1-2% of all employees. So it's a rarity thing that happens. But there's a huge risk with starting a business. 80% of businesses fail. And if you talk to a lot of these guys that have created a business and sold their business and created wealth, go talk to them, and they'll tell you that they had 2 businesses that failed.
They've been broke.
Yeah, they've been broke once, maybe more times, before they actually, got it to work. So, that's the other side of it. The overnight sensation only took about 20 years to get there.
That's right.
So, all right. Have a great day. We'll be back tomorrow with Michael Leibowitz. Right here on the show, we'll talk about upcoming Fed meeting, Fed policy. Are they going to cut rates? Also, his articles on the website today. So we'll talk about that article as well tomorrow right here on the Real Investment Show. Have a great day.